Hi, and welcome again to another edition of Market Analysis for today, February 23rd. I'm Giovanni Benacourt, analyst, trader, and educator with Vantage Markets. Well, it looks like central bank officials unanimously agreed that the last rate hike of 25 basis points was the appropriate size and that slowing down the pace would better allow them to assess the economy's progress. But several participants will have also backed a half point hike, the minutes showed. That tells us that we should be taking the Fed at its word. The inflation battle isn't over. Jerome Powell has said as much on several occasions, and yesterday St. Louis Fed President James Bullard maintained that the economy can still withstand more aggressive policy. And yet, despite the dip this week, markets right now are brimming with bullishness, and Reddit loving retail investors are partying like it's 2021. The everyday traders that powered the meme stock boom of 2 years ago are back in force, flying in the face of Jerome Powell's hawkishness and helping fuel the stock rally of the last 7 weeks. Data shows retail investors have been spending a record 1.5 billion on a day on stocks this year, a total reversal from last year's brutal sell-off. Remember, at the start of the pandemic, government stimulus and near zero interest rates gave retail investors the perfect opportunity to lay down speculative bets. That set the stage for rallies in the meme stocks like GameStop, AMC, and Bed Bath& Beyond, which ultimately led to a high-profile battle with hedge funds trying to short those companies. Fast forward to 2023, and the retail cohort is back with a 1.8 trillion stash ready to deploy. That number balloons to nearly 5 trillion, yes, trillion with a T, if you include the roughly 3 trillion parked in money market funds held by institutional investors. The spike in enthusiasm comes from hopes that the economy can avoid a recession, even though a downturn is still in the cards. With all of these headwinds, retail investors are jumping in on maybe some ill conceived optimism. Currently, the New York Fed's recession probabilities model puts the odds of a recession at 57%, which is the highest it's been in roughly 4 decades. But economic data be damned. Retail investors are still piling into the riskiest corners of the market: crypto, EV stocks, and growth picks. Last year's biggest losers have broken through as early favorites. Even three triple digit surges in SPAC stocks have made a comeback. Well, what can that tell us about the markets? Well, we see that the market is obviously going to be open on upside. We have a 21-day moving average very close to the market, above the market, acting as a dynamic resistance, but market most likely will run through that. And let's see if we can reach our resistance of 12,400 for today. The Obviously the RSI is peaking above 50, so the momentum is positive. So we are going to be going long this morning on the indices, as well as obviously the S&P and the Dow. All of them showing to open up strongly to the upside, as well as crude oil. Crude oil did a turnaround yesterday after such a dramatic upsurge in inventories in the United States. But also in question as crude oil comes around, there's a talk that China and Iran has inked a 25-year uh, workforce where China will come in and explore or obviously help Iran in their production of crude oil. So China is hopping into consuming Iran's production. So that's not gonna be good, obviously, for the states. So that's showing that the states is in a way wanting for Russia's oil to continue to being sold, being consumed, because if that's the case, it will help them maintain their prices for gasoline down for the upcoming summer. So that's going to be a battle that we are going to be seeing, and therefore we are going to be seeing obviously volatility, demand in crude oil. So all of this can be a dip, uh, if you will, uh, buying crude oil. So I am bullish on crude oil, even though I took a beating yesterday on crude oil, but I am recovering back. I'm recovering some of those losses today, so I am continuing to be bullish on crude oil. Nat Gas is the one that has made a nice little pop. Check that out. Nice little pop into the upside. Nat Gas, that could be short lived. If we do happen to buy it, that resistance 250 will be the next one in place. As far as gold goes, well, gold is really looking to stay above 1800, below 1850. So that range of $50 is where we're gonna be trading. So far right now we are bullish. We could be bullish on gold in this morning, where we could come in and take up some positions, been testing out the high of yesterday, which is right around 1845. So let's see if that will be the case for today. Bullish on gold. Silver also bullish on silver to the upside, buying some silver. Copper, this gap down can be, let's say, well, okay, so if we have the wick and the market inside of that wick, can we say that it's been closed? No, well, we have to come in and meet where this candle closed, which is right at 4.12, so 415 could be that the place where they come and say, okay, we closed it. So far up to the upside on copper, being bullish on copper or buying copper. Uh, Bitcoin 25,000 is resistance, so would it will trade to come back up to it, and that's most likely the scenario. Then we have the currencies. As far as the dollar index continues to increment or to rise, then it's gonna obviously put pressure on gold, the metals, and the currencies. So the euro is looking to stay above 106. I'm seeing that we perhaps today we'll see just a flattish day, uh, as well as the pound, because the euro dollar index is looking to stay around 104.50. So anything below 104.50, trading back down towards 104, we'll see a pop in obviously metals and the currencies. If the dollar index pops to 105, okay, then we'll see a decline in the currencies and metals, and most likely also in crude oil. Okay, so that's my scenario for today. Have a fantastic trading day, and I'll see you tomorrow.